Scott Riley, the market update desk, May 22nd, and I'm still trying to thaw out from the cold weather yesterday. Man, this spring has been just brutal on weather, and I'm anxiously waiting for us to get some warmer weather here. Now, yesterday we kind of had cold weather in the market. We saw a significantly below average demand in the 20-year bond auction. That caused a market sell off in bonds, pressured yields to the higher side. It was graded a C minus. So we saw just less demand than what we had been the last 3 or 4 weeks on specifically this 20-year bond auction. Also, late yesterday, the House passed the quote, one big beautiful bill. Now, this is causing concern, fear in the bond market because it could very likely add to debt levels and result in more treasuries needing to be issued, which creates more debt, more interest carry for the United States. And that'll have to be absorbed within the bond market, which likely would pressure it to the upside. Now, this is even more concerning because the bond market, we're already seeing debt coming up upon the X date, which is the date which we're going to, quote, run out of money to run the country. There's some extraordinary measures that the Fed secretary can, the Treasury secretary can do. But when we saw this happen last in 2023, we saw Treasury no longer basically run down the general fund and pay everything up until that last possible date. And that's when the debt ceiling got raised. And we had a big run up in bond yields, which caused spikes in mortgage rates. That was August of 23. If you don't recall it, we saw big jumps and it was quite painful. And it took us multiple weeks to kind of claw that back. So we're watching that really closely. I can't imagine we're going to get an agreement on the debt ceiling before almost the very end. So that's why right now could be a much better time to buy than the fall. And that's a shout out to all the home buyers out there, maybe sitting on the fence. Might just be better to do it now versus later. Existing home sales fell 0.5% in April to an annualized rate of 4 million units. This was worse than the slight positive that was expected. Year over year, sales are down 2% and are well below where they normally are during this spring market time of year. It means there's a lot of pent up demand that's continuing to hold off, waiting to come through. When rates do come through, and come to the downside, man, that pent up demand is probably going to be a wave of buyers. Don't let yourself be on the crash of that wave. Ride the top side of it. Median home sales rose 1.8% to an annualized rate of year over year rate to 414,000. Inventory, this is kind of a misleading number, and I'll explain why, rose 9% month over month and is up 21% year over year to about a total of 1.45 million units for sale. Now, that in correlation is about a 4.4 month supply of inventory. It's slightly higher than what we had in March at 4%, still less than what the market considers balanced at 4.6%. But keep in mind that's national, and we've been talking about this. You can't compare local to national. You take out California with price issues there, take out big chunks of mega metro areas in Texas, and the issues that are happening specifically within the condo market of Florida, and this number becomes very different. Locally, we're nowhere near this type of inventory. We're closer to, I think I saw the last report for Kent County was 1.3 months. So it's good to know the national market, but you need to be focused on the local market. And that's why it's so important to be with an experienced, knowledgeable realtor. So homes remained on the market for 29 days on average, which is down from the previous month of 36. So we're still seeing, even though we're supposedly seeing an increase in inventory, we're seeing a speed of sales happen. Now, 18% of the sales sold above list price, which was down from 27% the previous month. Once again, that's national, not local. Still seeing significant price challenges and bid above ask price locally. Had lots of buyers in this position. First time buyer percentage of the total market grew from 32% to 34% in March. Cash buyers accounted for 25% of all deals. Investors made up 15%. Those are just a tick lower than the April numbers. Coality single family rent index, very interesting. It's another indicator of where rent's going. Another company that tracks it shows single family rent prices rose 2.9% year over year in March. That was unchanged from the February report. Now we look at this and say the 2.9% that they're reporting is much lower than what's used in CPI and PCE. 4% is in the CPI and PCE reports. Now, if they caught up, because it's backward lagging many months looking, if it caught up to real time, this 2.9%, CPI would be coming in at 2.3%, PCE would be coming in at 2.4%. And that would be a much different take of what the bond market perceives inflation. Initial jobless claims, pretty flat on initial claims. It was down 2,000 to 227,000. Continuing claims rose 36,000 to 1.9 million. Now, this is the second reading above 1.9 in the last few weeks, and the second highest level since November of 21. Shows that we've got challenges within the employment market. Now, on a technical analysis, we're seeing these big movements. In fact, the bond market yesterday spiked above 4.6%. Not that long ago, I think it's about 8 weeks ago, we were sitting at 3.81% in the bond market. Big changes. Now, in mortgage-backed securities, we're seeing a possible hammer pattern play out. And in the 10-year treasury, we're seeing the possibility of a formation of a shooting star pattern. Both of those would portend and forecast potential better mortgage rates. Now, if we get there and how long that lasts, that's going to be the big question, because we have so much going on, from tariffs to politics to geopolitical to potential wars to this big, beautiful bill being negotiated and debt ceiling, as we talked about. All these things are very important, and we're trying to keep up on it, trying to get that information out to you. Long and short of it is you need to be knowledgeable, up to date, and tune into us so we can give you the proper information on what's happening so you can make educated decisions. It's a great time to buy. You can see in the market in West Michigan, it's really heating up. Spring market probably started about 3 weeks ago, and it is busy. Give us a call. We'll break down more numbers for you, help you run numbers, get pre-approved. 616-293-2189, the Market Update Desk, your original singular market news source for West Michigan.